Binary options and Forex trading are two of the most popular ways to trade financial assets in global markets, and both offer access to a wide variety of instruments for traders at all levels. In binary options trading, assets are divided into categories such as currencies, stocks, commodities, and indices, allowing traders to predict whether the price of an asset will rise or fall within a set time frame. For example, currency pairs like EUR, USD, GBP, JPY, and USD, JPY are commonly traded in binary options because of their volatility and liquidity. Commodities like gold, oil, and silver are also popular among binary options traders due to their clear price trends, while indices like the S&P 500, Nasdaq, and FTSE 100 provide opportunities to speculate on broader market movements. On the other hand, Forex trading focuses exclusively on currency pairs and operates in the largest financial market in the world, with a daily trading volume exceeding $6 trillion. In Forex, traders buy one currency while simultaneously selling another, aiming to profit from the fluctuations in exchange rates. Major pairs such as EUR, USD, USD, JPY, and GBP, USD dominate Forex trading due to their tight spreads and high liquidity, while minor and exotic pairs like EUR, TRY, or USD ZAR attract traders seeking higher risk and potential rewards. Both binary options and Forex offer unique advantages. Binary options have fixed risk and reward, making them easier to manage for beginners, while Forex allows more flexibility with position sizes, leverage, and trade management. However, both require a solid understanding of the assets involved and careful analysis of market conditions. The choice between these two depends on trading style and risk tolerance, but many traders use both to diversify their strategies across multiple assets and markets, taking advantage of the fast-moving nature of currencies and the stability of commodities and indices.